Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today. Markets are neutral to positive. Well, not the NASDAQ, but the NASDAQ continues to lag on the back of Twitter earnings from yesterday, as well as eBay. Both stocks are down solidly on the day. Twitter, for instance, down almost 11% today. But the S&P and the Dow continue to show strength. Money flow continues to head towards the safer investments, or at least what the average investor views as safer investments, which is old school, low beta names. Beta is the volatility. So that means low volatility names like the IBMs, the stocks that have been around for ages, DuPont, Hewlett Packard, those type of names are seeing continued money flow. While stocks that have high betas, like technology, biotech, those continue to be on the weaker side. We just got word from the Federal Reserve on the FOMC policy statement, and really interestingly enough, you could see the reaction initially. We saw a drop, then we saw a pop, and then the markets came back in. And this is one of the rare situations where there's been almost net no move on the markets. I mean, you can see you went up here and you went down here, but where the markets are hovering was basically where they were prior to the FOMC policy statement. Now, what did the FOMC do? What did the Fed do? Well, they cut another 10 billion. They said the economy seems to be improving. They basically said everything that the market expected, which is probably why things have stayed stationary. Oftentimes the markets will look for any small nuance, small little indicator. Oh, they changed a word here, they changed a word there, and then react to it. But it doesn't seem like the market's reacting. Everything seems to be pretty much in line. Today we did get GDP out, the final revision on GDP, and it was actually horrible. 0.1% growth. Again, that's 1/10 of 1% that the economy grew in the first quarter. Very, very small. But the market seemed to be shrugging that off as a weather issue. So remember, the first quarter of the year seems to be weather. I think the second quarter and the third quarter will really dictate, and according to the Fed, it should improve. So we're going to see how much it improves in the next couple quarters. Okay, so that's what we have going on here at this point in time, guys. Markets continue to just hover flat on the S&P and the NASDAQ, slightly positive. Excuse me, on the S&P and the Dow slightly positive, and the NASDAQ again is seeing a little bit of selling here, down about 4 points. Just quickly looking at the markets themselves, here's the small gap down on the GDP number. We got ADP private sector numbers, which came in line, but the GDP shocked the markets a little initially. You kissed the 200 moving average, bounced up, you pierced the high here, pulled back, got a little bit above, pulled back, and then are just chopping here. Market's starting to trade up just a little bit here, going into the last hour and a half of the trading day. If we look at a couple key movers out there, take a look at the dollar today. The dollar down going into the announcement by the Fed. Actually got a small bit on the Federal Reserve comments, so you're seeing just a minor little uptick there. And if we go to gold and silver, let's take a look at gold and silver. You can see gold opened sharply lower, rallied up, and is now selling off on those Fed comments. Gold would be shooting up if we heard comments about how they were going to stop cutting quantitative easing, if they were going to continue to print money. But the fact that they seem to be in line with everything they've been saying is obviously something that is going to hurt gold, because less money printing means there's less dollars out there. There's less dollars out there than anticipated, then gold's price should drop in comparison. Okay, hopefully you guys understand that. It's not too complex of a thought process. Silver SLV, let's take a look at silver here. Silver as well taking a beating today. Nice drop on silver, although getting a small bounce in this candle. And oil's also taking a beating. Oil's been down all day. It is actually getting a small bid now. But for the most part, things are quiet out there. I mean, I think all eyes are now going to turn to the jobs number on Friday, the non-farm payrolls and unemployment report. And this will be probably the first jobs number where they can't blame it on weather, because this will be the jobs report for April. So, if you go back to March's jobs report, which came out in early April, first Friday of April, you could kind of make the case that, bad weather still in April. But really going into April now, you can't make that case. So it seems like that's pretty much out of the case, and we should get a clear picture of what the jobs numbers are. And I think the market will really key off of that for strength or weakness. I would say about a 200,000 jobs number is what you should be expecting, what the market seems to expect, and we'll see if it's higher or lower. A couple stocks that I talked about earlier. Twitter today, guys, you can see early in the day was a little bit lower, just hovering now sideways, down about 10%. Also, eBay reported poor earnings as well, and that stock is down about 5% on the day. That's a little bit off the lows as well, just like Twitter, but still down pretty sharply. And again, that's dragging down some of the NASDAQ plays out there. I mean, if you go to other high risk value plays, you can see Netflix. Netflix down another $4. It's off its recent lows, but it's still showing weakness when the overall market is doing a little bit better, and that's what's dragging down the technology sector. Facebook had a conference today, and that stock's actually trading up on some of the chatter from Zuckerberg. And again, that's a nice little move. But if you go to other stocks out there, let's take a look at Yelp. Take a look here, and that's off of Twitter. You can see Yelp taking a beating, and LinkedIn, which I think reports earnings in the next week or so, is also still down, although not down much, just about down 80 cents. Okay. Aside from that, again, just flipping back to the SPY, guys, just to summarize here, you can see the markets are starting to drift up. You could see some short covering into the close. I could see a fair amount of shorts thinking the market would sell on the Fed comments today, and that's not happening. So you might see a little bit of upside into the end of the day. I do think, again, wouldn't shock me to see the markets rise in the coming days a little bit, but I think it would be short-lived at this stage. And then you see another big flush in the markets, maybe as early as Friday afternoon going into the weekend, if anything else bubbles up about Russia. Okay, and Russia would probably be the big concern, and then plus the jobs number Friday morning. So I think right now, the next couple days, my projections neutral to upside going into Friday, and then Friday with the jobs number and maybe weekend selling, you see the markets come back in. All right, guys. On that note, I bid you farewell for now. Come take the 7-day free trial to the research center. Again, activity beautiful. All right, profits continue to flow. We have shorts, we have longs out there making us money. And again, if you want to see our track record, just go to the In the Money Stocks website under free market action. You can see the Research Center track record. And that'll give you the every trade that we've opened and closed in 2014. If you want to see 2013, go to 2013 on the drop down. Every trade, folks, in the Research Center. There it is for you to view. And you can see the profits so far 176 percent net gain this year for Research Center members. Have a great afternoon, great evening. Again, take the 7-day free trial to the Research Center. Talk to you soon.